Crypto proving once again that we can make millionaires out of billionaires. So here's a recap of how we got here. Previously on Yu-Gi-Oh! So this week started off with CZ and Binance tweeting that they were going to sell their entire stake of FTX tokens because FTX was potentially insolvent. Now Sam of FTX responded that everyone was safe and that customer deposits were perfectly fine.
But they were not.
Now after CZ tweeted that, the whole crypto space was like, what does he know that we do not? And as soon as that happened, people started to withdraw their funds and sell their assets, which FTX could not honor because they froze roughly $6 billion worth of customer withdrawals, at which point Binance offered to buy FTX pending due diligence. Now by Wednesday this week, everyone was crossing their fingers and praying that Binance would come in and help rescue FTX, but after doing less than 24 hours worth of due diligence, here's what they found. They have officially backed out of buying FTX. And as soon as that happened, the price of Bitcoin collapsed almost instantaneously to $15,000, Ethereum to $1,000, and Solana lost roughly 45% of its value. And that's because people are afraid that FTX is going to start selling off their balance sheet. Anything that FTX touched started to collapse. Now this likely means that no one is going to come in and rescue Voyager, and all in all, crypto has lost over $1 trillion worth of value in the span of a few days. And we're only up to Wednesday, but now you're all caught up and there's been some new developments. Sam Bankman-Fried filed for personal bankruptcy because it was reported that he owed more than $650 million worth to his creditors. And if FTX is not bailed out, which looks like at this point it probably won't be, this will have a huge impact on the whole crypto space and it will set us back years worth in value lost, years worth in consumer confidence, and worst of all is the possible contagion effect of all the other major exchanges and businesses that had anything to do with FTX. So in today's video, I want to help explain the madness of crypto this week, so let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for less Binance, because now Binance has pulled out of buying FTX, and it's needless to say, but if you have your money on FTX US or International or BlockFi, please take your money out as soon as you possibly can. It's not worth the risk right now because Sam has told us that unless he gets a cash infusion to get FTX out of liquidity problems, that most likely they'll have to declare bankruptcy. At which point, since most investors are considered unsecured creditors, people would be very fortunate to maybe get 10 cents on the dollar. For now, FTX US is still operational and FTX.com resumed withdrawals temporarily, so please go check it out right now. If you still have your money, go withdraw it ASAP, because my worry is that if FTX.com collapses again or declares bankruptcy, that FTX.com could go after FTX US assets, at which point everything could be thrown into bankruptcy, so it's better to be safe than sorry. Please go take your crypto offline and keep it somewhere safe. Now during this whole process, I learned a little bit more about how this collapse could have happened and what crypto companies will do to prevent this in the future. But the way it seems this happened is FTX created their own native token that they leveraged and borrowed against while also lending out customer deposits. And the reason this is sad is because FTX was supposed to hold itself to a higher standard. Because unlike all of the other crypto businesses that have failed in the past, those companies, in their own terms of service, told us that they lent out our assets and that's how we made our interest. But FTX tried to assure us that our assets were backed one-to-one and that they did not engage in the practice of lending out our assets. Now we know that that is not true and they violated their own terms of service. Now this is the reason why Bitcoin and all of the other cryptos are crashing this week, because we're afraid of what could happen if FTX goes bankrupt, of what it would mean for liquidations and margin calls for the rest of the crypto space. Now, all in all, there's a history lesson for crypto to learn here, and this is about to blow your mind. This has been one of the longest running experiments in the history of money, and we just found the answer to whether or not they work because we saw the failure of it in crypto. This system was not invented by crypto. It was borrowed from the traditional banking system. It's called the fractional reserve banking system. And believe it or not, if you're someone who thinks that crypto is a Ponzi scheme, we're all actually part of a much bigger Ponzi scheme experiment that's been going on for a really long time. Here's how it works. If you deposit $1,000 inside of your bank account right now here in the US, your bank can legally lend on up to 90% of your deposit's value. So let's say someone else comes along and decides to take out a loan for $900 worth to buy themselves an avocado because inflation in the future is transitory. So they take out $900 and they deposit it back into the same bank to keep the money. That same bank can now lend 90% of that deposit's value, or $810. And this goes on indefinitely until this deposit is reduced to pennies. And with just $1,000, a bank can magically create $10,000 worth of value, even though it is 10 times the original deposit amount, and even though they may only have 10% of actual cash in their reserves. This means with just one simple tweet, if you could hypothetically undermine the confidence and trust of an entire bank and you got enough people to withdraw all of their money all at once, that bank would collapse and it would need to get bailed out. That's the mechanism we're seeing fail in crypto right now. But there's a big difference between crypto and banks. It's that people trust dollars because they're backed by the full faith of the US government, its power, and its protection. But the only tangible thing about dollars, unlike crypto, which represents nothing, is that dollars represent debt. Using this exact system is how crypto companies were able to model their business practices from the banks of printing unlimited amounts of money. Except unlike the banks, crypto companies run with no checks and balances, no reserve requirements, and no transparency. This fractional reserve banking system is all around the world with every single commercial bank. So if that's true, then why is the banking industry not considered a Ponzi scheme? A lot of people think it is, and it's compared to one, because both systems require people to have faith in it in order for it to function. And both crypto and banks technically promise the guarantee of some returns, because banks also package our loans and they sell it to other investors who hope to make more money. That's the problem though. Fractional reserve banking does not work with crypto, because the moment people lose faith in it, there's no one coming to bail them out. And that's exactly why FTX is seeking an $8 billion cash infusion. That's why the next phase of this crypto collapse really worries me, because as more and more people get scared and try to withdraw all of their money out of the crypto exchanges, their balance sheets will be tested and we'll get to see who's swimming naked. The famous Warren Buffett quote. That's the real test. And I'm really worried that this contagion effect has already spread to companies like Crypto.com, which this week have stopped withdrawals of USDC, USDT, and Solana. Pretty much anything and everything that had heavy ties to FTX, nobody wants to touch, and those assets are collapsing. That's why the Securities and Exchange Commission and the Department of Justice are teaming up to look into the mismanagement of FTX customer funds. But if FTX is allowed to fail, here's what I think will happen. Trust and confidence will be set back years, but crypto will eventually bounce back and it'll create a better product. And so far, over 9 crypto exchanges have pledged to show their proof of reserves using something called Merkle trees. Not former Chancellor of Germany Angela Merkel trees, but the way data is stored. Now, if you've never heard of this really nerdy term in crypto, it's really easy. Merkle trees allow exchanges to see a customer's account hash number, which shows them how much money we have. That data is then stored on a leaf node where it will then be audited by a third-party company to make sure that an exchange has all the money it says it does and that it's not lending it out to someone else. Because the only way for crypto to succeed at this point is to provide full transparency and to be a full reserve system, not a fractional reserve system like what's happened with the banks. Crypto companies should not be allowed to lend out customer deposits. They should not be allowed to invest those assets without our say-so, and everything should be provable on the blockchain. And for now, I think Michael Burry said it best, that the problem with crypto right now is that there's leverage in the system. And when you allow leverage to exist and to go unchecked without any transparency, then no matter how much you think you know about a company, you really don't know anything at all. With that said, on a personal note, I just want to tell you my personal involvement with FTX. Growing up, I've always felt a little dumb when it comes to investing. I still do sometimes, but I used to too. And I've always wanted someone to help me explain investing like I was 5, because I mentally am sometimes. And with each and every video that I make here on YouTube, I feel like I get smarter every week. And I try to make a very clear point that most of crypto is more so gambling than it is investing, especially NFTs. And I go out of my way to make a very clear distinction, the difference between grown-up adult investing and building wealth and gambling, not investing, but gambling less than 5% of my net worth into something trendy or topical perhaps that week to make my YouTube videos just a little bit more high stakes and a little bit more fun to watch. I try to counterbalance those videos with the real way to build wealth that's provable. which is the Warren Buffett approach, and to focus on broad market index funds and to max out your employer contribution match inside of a 401k, the traditional one, then getting a Roth IRA, maxing it out, then going back to the 401k and maxing that out, getting an HSA, maxing it out if you can, having some real estate, having some bonds, having some dividends, and diversifying. That is how I started my YouTube channel, and that has not changed. Even if the frequency of those videos has, my money is still true to those principles. But I realize now that no matter how many times I try to go out of my way to give that disclosure, it'll never be enough, and I have to live with that. Now, I'm very proud of the fact that I have never accepted money to promote a crypto coin or a token or an NFT, ever in my life. I know, sounds like it might be hard to believe, considering how many I've covered throughout the last year, but I was never paid to do it. And if anyone claims that I was, the burden of proving that would be impossible because it never happened. If it did, I would cancel myself off the internet faster than anyone else tried to because I wouldn't be able to sleep at night. So even though I never had a formal partnership with FTX or Voyager, I was never sponsored nor had any affiliate links on this channel, I can't say that I'm not part of the problem. I regret to have taken on the sponsorship with FTX on the Millennial Money podcast. I should have known better, and for that, I'm sorry. I owe you at least that disclosure and an apology. So going forward, I'm going to remove all of my BlockFi links and I will not include them, and I strongly urge anyone that has their money either on BlockFi or FTX to please move it offline somewhere that's safe while you still can, because you never know with everything that's going on, and it's better to be safe than sorry. So with that said, I will try to do better by you in the future. I'm going to continue to be transparent. Thank you for giving me the benefit of the doubt and for watching my videos, because without you, I would not be here. And as always, I would love to see you back here on Monday and Friday, sometimes a Wednesday. I'll see you soon. Bye-bye.